Hello everyone, welcome to our weekly webinar. This time it's all about scalpers and some rules that you need to have in mind in case that you are a scalper yourself. So just please go. I'm trying right now to provide you the handout, the PDF version of this webinar. And here we go. So you can find our slides in the handout section. Feel free to download it. Understand that the scalping is very, very famous. I can see from the attendance that we have. So before we start the session, as usual, I would really, really appreciate a feedback in regards to the audio. Just to make sure that you can hear me loud and clear. So I will also, I can see, now it should be clear now. Okay, perfect. So, and the visual, perfect. So yes, guys, please give me a feedback in regards to the audio. I would really, really appreciate something like that. Until I have any feedback from you in regards to the audio and the visual side of the webinar, I will go through weekly the disclaimer, and once I do that, we could start as usual. Thank you very much for your feedback, Eugene, Opeluma. Thank you, guys. Thank you. Appreciate it. So, disclaimer, these materials provided as general marketing communication for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any sorry, I'm lost. And any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that an investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading in leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find all our risk disclosure on our website. If there is anything that you cannot find, please contact us. And in general, anything you need, we are here to help, as I'm usually saying. So let's move on. Guys, I would like to remind you that this webinar is being recorded. So at the end of the session, you're gonna receive an email with the recording. If not today, tomorrow for sure, okay? So always check your spam folder and etc. That's myself. I believe the 44 people that are here know me already. Nearly 6 years yeah, isn't it 6 years? Oh my God, 6 years in the HFM family. Trying my best to help you as much as what I can. So anything you need, just contact me. As I keep saying again and again and again, just send me an email and say, Andrea, here is my screenshot. This is what I have done. Something went wrong. What have I done wrong? Let's see it together. Eugene, no. The answer is no. So, okay, scalping basics, scalping risks, and how to manage them. Sorry. Obviously, if someone tells you that there is no risk, then he's saying nonsense. Risk is everywhere, in every single business that we're trying to do, not only in trading, everywhere. If you want to open a shop, if you want to sell fruits, if you want anything you do, there is a risk. That's why you need to do a plan. You need to do your own risk management beforehand, just to limit as much as you can the risk. Okay, I'm honest. There is nothing in life that is risk-free. Nothing. And if you believe that is something, please, I dare you. I just challenge you to say what that is. So, like everything else in life, like every business, every work, everything contains a risk. So we need to treat it that way, and we need to have a plan. We need to stick on it. We need to do our risk management, to be aware, or to set some guidelines, to set some limitations on how much we are willing to risk, especially if you're a scalper. Okay, scalping is a really fast environment, because it is designed to profit on small price changes, right? So that's why you need, there are some risk management rules that you can adjust if you want to. You can add them in your plan, okay, in order to limit any potential loss or even prevent losses. So, because I don't know how many of your experienced traders are, how long you've been trading, or whether we have new people here, I will take it step by step by explaining, first of all, what is scalping. Anything you need, just interrupt me, okay? So, what is scalping? Scalping is a strategy. Okay, strategy. We have plenty of strategies out there. We have plenty of different kind of traders, and that's acceptable. I mean, each one of us has a different personality, has a different. There's a different way to control its emotions. So, follows a different strategy. Follows a strategy that he understands. Okay, so there's nothing wrong on having a different strategy between us. Okay, scalping, it might be one of the most famous ones, especially for retail traders. Okay, institutional traders as well, but they are also posing some very big long-term trades as well. So scalping is the strategy that is designed to profit on small price changes, with profits on these trades, okay, taken quickly and once a trade has become profitable. So as soon as, so mainly has to do with small time frames, short time frames, 1 minute chart, 5-minute chart, 15-minute chart, okay, maybe 30-minute chart as well. And once the trade has become profitable, we have a quick closure of the position. So small profit on small price changes on fast time frames, etc. Okay, scalping has a specific, or forms, if you prefer, a specific discipline. Trading discipline requires discipline, like all the other strategies, but especially the scalping, because it's fast, it's quick, it requires more discipline, okay, because the number of trades is so large and the gains from each individual trade is so small. A scalper must have a rigid adherence to their trading system in order to avoid large losses that could quickly wipe out dozens of successful trades. What I mean, it requires exactly because we are referring to multiple trades, okay, and a lot of trades, okay, maybe in a single day, maybe within an hour, okay, exactly because scalping is all about many trades, small ones, but many. It is essential to for a trader to have a rigid adherence, to stick to the plan, to have a high discipline, because just one large loss could break even its successful trades or even wipe out all its successful trades. Do you get what I mean? So yeah, just have this in mind. Yeah, so scalpers, as I said, may take many small profits and not run any winners in order to seize gains as and when they appear. So the target, the aim for a scalping strategy to be successful is 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 through small how can I say, small profits, but a large number of profits, so many trades. So this is the mentality of scalping. Instead of having long trades with the large win sizes that could last for hours, could last for days, scalping aims to have many trades, winning trades, but small ones. What else? So it's the idea of lower exposure risk, okay? Since the actual time of the market on each trade is quite small, lessening the risk of an adverse event causing a big move. This is the mentality. This is where the scalping relies on the idea of lower exposure risk when in a quite small time frame, or the period in which the trade will be open, that could have an end to avoid any events, big events that could cause big moves. So on top of that, something that I would like to add as well is that it takes the view that smaller moves are easier to get than larger ones, and the smaller moves are more frequently than larger ones, obviously, okay? So, however, scalping in forex trading, this is what we are mostly interested in. So as I said, I think you already understood it, but just to make sure that we are all in the same line. Scalping in forex trading, do I have this over here? Or is it in my next slide? Oops, sorry. Missed the slide. Here we are. Yes, as I was saying, we have already covered the majority over here. So as I was saying, forex in scalping in forex trading involves opening and closing multiple positions on one or more forex pairs. So it might contain I don't know, 5, 6, 7 positions in a single asset, in euro dollar, for example. It doesn't matter, but it's just the style that involves opening and closing multiple positions in one or more forex pairs over the course of a day, maybe seconds, minutes, and etc. So instead of opening one position at the start of a trend and close it at the end of the trend. So in scalpers aim to open and close several positions over a trend's course. So it is used in a real-time technical analysis, okay, to make small, frequent profits. As I said, it might be a few seconds, it might be minutes. The ideal, theoretically, for scalpers is typically between 1 minute and 5 minutes. Okay. What else I wanted to also just one more thing before we actually go through the basics. Scalping is also possible using either a manual or an automated strategy. So manual requires yourself to monitor the charts constantly, where there are some automated methods used as well. So I think you can find many of them in the MT4. There are some expert advisors that contain scalping strategies. So yeah, there are two ways: either manually, so constantly monitor it yourself, or opening your positions based on your judgment, etc., or use or test an expert advisor that is expertise in scalping. What else? So just to highlight before we go to the very next slide, the importance of risk management. Why risk management is essential, particularly in scalping. Okay, I know that you can say, Andrea, but you're saying that every single time. Yes, because it's the number one. You don't go anywhere without risk management. Okay, there are people that send me, that's my, I met I met someone in our Egyptian in the expo in Egypt, and he said, Andrea, I saw all of your webinars with Stuart for the last 2 years, but it's just me. It's me. I cannot follow a plan. I prefer to put everything all in. He admitted that he's a gambler, but okay, I respect that you might have the nature of being risky, but I don't necessarily agree, to be honest, guys, because if you're risking your own money, your savings, if you are not rich and you're just have few bucks at the side that you would like to invest in order to gain more, and this is just savings. I mean, you cannot have this mentality. Okay, I understand that some people they have extra money to spend, but I don't think that is for everyone. Okay, that's gambling, and with gambling is prohibited. I mean, it's not a way of life, but okay, I guess it's up on the discretion of every single one. Oh, on the discretion of every single one of us. But yeah, risk management comes first. If you want to succeed, if you want to, if you're risking your own money, you need to get discipline. So, and because scalping is in a fast environment, okay, in a 1 minute, 5 minutes, I said, risk management becomes vital, okay? Regardless of which scalping strategy you're using, there are several out there. Regardless of which scalping strategy you're using, risk management is essential, simply because we have leverage products, right? Everything that we trade is a leverage product because it enables to traders to open a position with a deposit called margin, right? So this can amplify profits, but can just as easily magnify losses because your profit or loss are calculated from the full value of the position. That's why risk management is vital. So let's move on. Basics, how long scalpers usually hold trades for. I think we already covered that. It might be a few seconds to a minute. Others aim to hold until the market hits predetermined target, but are quickly exit if price action doesn't support the trade idea. So this might last up to 15 minutes. There are also scalpers that aim to turn position to intraday trades and might hold the trades until price reach a major high time frame support. So there are 3 different kinds. just for your own informations. Okay, we pretty much covered this, but I'm gonna clarify once again. No one is special than or better than anyone else. We are human beings, driven by emotions, driven unfortunately by greediness sometimes, by fear sometimes. We are human beings. Having the mindset that, oh, I am special and better than others, oh, I know what I'm doing, oh, I will beat the market at no time, I will make millions, that's the wrong mindset. You need to be humble, you need to be disciplined, you need to check you need to trade what you see. Okay, waste your time to study, to see, okay, I have euro dollar over here, which are the nearest historical price levels, which are the key support resistance levels based on the history of euro dollar. So study, check your charts, see what it tells you, try to read them. Okay, so just I'm highlighting the risk, okay, because today's webinar is about rules, about risk that scalping contains. So the worst thing to do is to trade blindly. What I mean by that? Okay, it's an old example, but it doesn't matter. The example doesn't matter. What matters is the trend that I'm showing over here. So having them and trying to pick tops or bottoms in a strong trend, or buying breakouts in a range bound, that is like you're blindly trading. Okay, what I mean by that? Okay, picking the tops or bottoms, it's a strategy. Okay, it's a way of trading. Fair enough. But you need to have a clear range trading environment. And even then, you need to be careful of contracting ranges that could lead to breakout scenarios. So what I mean, let's see the example. This is, what is this? It's euro dollar. Yes, it was euro dollar, a very, very old one back in 2005. It doesn't matter. I just want you to see how they perform. So we have over here in 2005, it picked over here. It picked here. Can you see it picked? So you can see in the picture that euro dollar tried to pick tops, okay, but it reverted quickly. So it reverted again and trying to recover losses in 2007. So within that was 2004. Within 3 years, sorry, 3 years, 2004 up to 2007. The only thing that we have seen from euro dollar is 3 years of frustrating sideways movement, ranging market. Okay, so in a ranging market, picking tops and bottoms should be considered to be a fair strategy, but you need to have a clear view that indeed is a ranging environment, is moving sideways. For trending environments, traders will find a higher success rate by buying on retracements, right? So the trend started breaking, getting outside the range and extending higher and higher and higher. Every time that the the asset was slightly in a pullback, every dip provides some higher success rate by buying the retracement. So be on the side of the trend. Trend is our friend, and buying the dip, as we're saying, provides some higher success rate in an uptrend. While in a downtrend, selling on rallies is it's also a higher success rate, contains a higher success rate. So let's clarify. Picking tops and bottoms could be a nice strategy if we have a clear range trading environment. And even then, traders need to be careful of contracting range leading the breakouts. While in a trending market, any retracement in an uptrend, let's say, any buying on the retracement is a higher success rate. In a downtrend, any selling on rallies is a higher success rate as well. Now, scalper risk and how to manage them. Trading without preparation. Not tried and tested trading plan that is written down. Well, so pretty much, okay, there are, I don't know how many of you have never follow a plan, or you haven't put down notes, things that you have noticed, breakout levels, potential breakout levels, support, resistance levels per asset that you have identified. So how many of you are not doing this kind of preparation? Hopefully not many, hopefully none of you. Okay, until you reply, guys. Okay, I know that it's getting a bit tired for you, but I'm gonna repeat it. People, traders that don't have a trading plan that it's written down, okay, and unfortunately this is nothing, Eugene, nothing. You don't write down that, oh, euro dollar right now is at that level, so if it breaks that, then I will enter long. If it breaks that, then I will enter. Nothing. You don't even try to study what you see and like put some notes down. Or you don't have your setup. You don't have particular setup. I mean, always using, I don't know, this kind of fast moving averages, this market level, RSI, etc. Okay, still looking. Okay, fair enough. So fair enough. So you're still trying to find out what is best for you. Okay, fair enough. I understand that. Unfortunately, most traders have no trading plan written down, not just having a trading plan in your heads, written down and strictly follow it. They don't. I mean, and not only technical indicators, but also relevant ideas about price action to identify trigger levels per asset, support resistance levels per asset, their potential entry if that and that happen. Okay, yes, we can. I can. There are in the past webinar section, we have webinars on how to create your own plan, and we have also some suggestions. If you go to the past webinar website, let me send it to you. And if you have the time, please check this website, search on this website plan or trading journal or strategy, etc., and you will find plenty of webinars that we have done in the past in regards to how you can create your own trading journal or trading plan, and etc. Now let's continue. Yeah, here we are. uh, where I was. Um, so yeah, for people that they don't have a plan, they don't have a plan written down, journal, their own notes, and etc. Typically jump frequently from one strategy to another. So what happens? Because they don't have a plan, okay, they are saying that, okay, they are saying, okay, I'm gonna use fractals today. I can see that the price broken my fractal, okay, broken the up fractal. So let me just put so for example, I don't know, let's say, they've seen that, boom, it broke my fractals, I will enter long. And as soon as they see a pullback, they are frustrated. They are worrying. They are saying, "Oh my God, that wasn't correct. Oh, I'm losing, and they're turning quickly to a different strategy, in the hope that they will shift to an ideal, perfect system that will work eventually. So they might say, "Oh my God, it's going down. It's going. What should I do? What should I do? I'm gonna use. I'm gonna use. Um, I'm gonna open another position, but a short one, and with bigger value, with bigger position." So they are. How can I say that? That's not an ideal example, but what I'm trying to say that traders that they don't have their own plan and they don't have a plan to stick on it, they are driven by their emotion, and they are frequently jump from one strategy to the other in order to succeed, and at the end they are in loss because there is not the perfect system anywhere. There is nothing perfect. Okay, what you should try is to find a strategy, a system that works for you, and to limit as much as you have your losses, okay, in order that at the end of the day, at the end of the week, you end up with profit. Okay, you might open, I don't know, 10 positions the whole week. 9 could be successful, 1 would be a not successful. That's fair enough. If you have your plan and you're following it, you have a better chances and higher chances at the end of your day, at the end of your week, to be on with a profit. Every trader needs the detailed trading plan that covers every aspect of their job as traders. Okay, so you should understand, guys, that there is no ideal strategy that will give you only consistent profits. That's an ideal word. But you can find a strategy that works very, very good for you, and it gives you profit the most of the times. Okay, I don't know how to express it otherwise. Trading without preparation, lack of daily preparation routine. So that's some steps that you need to follow. Sit down on your PC every morning, or if you are busy in the morning, you have a second job or something. Whenever you're free, sit on your PC, ideally an hour before the trading session starts. So if you're a person that goes at work at 9 o'clock, okay, since we know that at 9:30 European, okay, this is server time, at 9:30 for me at least, European session opens. So you need to sit an hour before the European Open to check what's going on, okay? First of all, you need to make sure that your PC works properly, connection is good, there's no issue, and you will need to start checking what happened overnight, checking your charts, study the markets. For example, if it was okay, let's see. I have my euro dollar. It was sideways yesterday night since Friday, and yesterday Monday it entered this range. Okay, I spotted a range since Friday. Bam, 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 bam. So that means that was the European Open. I'm going to ignore this for a second just to show you what we in preparation. If you are an intraday trader, scalper, so the first thing that you need to do is to see where you're standing right now. So, okay, since Friday was in a sideways movement, so the resistance is at this top, support is at this top. So you know that if on the open it breaks one of these lines, that could trigger a long or a short position. So you need to study a bit the markets to see what happened overnight, to identify support and resistance levels, which are used as your potential entry levels, right? That's why we're doing this homework. So that's an hour before the session starts. Now, if you are a trader that trades US market, US Open, so again, okay, US Opens in 2 hours. Okay, here we have dollar CAD. Okay, what I'm seeing over here in dollar CAD, it used to be in a kind of an up channel. It broke it down. So I have a low over here, another low over here. That's a 30 minutes chart. And this is a double bottom, as you can see, because I have two bottles. So what I am seeing over here is that it rebounded. Okay. So I'm gonna use. So where this helps me? Okay, it already recovered 50% of the losses that we have seen yet in the morning. So that means that my immediate resistance is at the 61.8 Fibonacci level. It's a very strong retracement level, remember? So, okay, I've done my homework. I know that dollar CAD, I need to monitor dollar CAD because if this is a key retracement level, so in this level, we usually see the price pulling back. So I'm going to keep monitoring it until the US Open to check whether we'll manage to break it. So that will mean that it could enter back, it could return back to this upper channel, or whether it will indeed react as a strong retracement and we're going to see a pullback again. So MACD is still negative, stochastic and RSI show up, so show that there is still some momentum higher, but I don't have a confirmed closure above the 61.8. So I'm gonna wait. I have put my immediate resistance. I have the Fibonacci levels that could give us some support, and I'm waiting. So this is what we in homework. So going through your charts in order to find trigger points, support, resistance levels. So for example, okay, that's gold. So the peak of the day is still remain a key resistance level. Here, the confluence of latest low of the 4 hours lows and 20 period moving average in the 1 hour chart, which also is somewhere close to the yesterday's peak, provides an immediate support in the short term, in the 30 minutes chart. Okay, fair enough. So let's wait and see. Let's wait and see, because a return back below 1770 could open the doors to yesterday's bottom. So this is homework. In order to be ready, once these levels are triggered, in order to be ready to enter on spot. This is what we called homework. And obviously to check your calendars to see whether there would be any major announcement during the open in order to avoid it. It is essential to be aware of the macro announcements. It's essential to know what economic data gonna be released today, because it might affect your position. It might kick your stop loss and kick you out, even if at the end the market goes on the direction that you wanted it. So it's imperative to know what macro announcements are taking place during the day and create alerts for them. in order to either avoid them, either close your position before the announcement, unless if you have a strategy that is specific for event trading, that is specific for opening position during events announcement. Okay, but you need to have a track record to prove that indeed it is better to avoid new releases, or it's good to trade on the new releases. Okay. So you need to have a clear understanding on the markets, on where your assets are standing, any impact that they might have. Okay. So let's move on. So again, more risk, clarifying risk in order for you to avoid them. Some traders mess up their minds by having a television on, while others are constantly distracted by internet chat groups and social media. What I mean by that? Some people might have Bloomberg on, Bloomberg TV, and hear all the news, what the journalists have to say. But remember, everything that the journalists are saying involves the overall economic outlook. So it might not be relevant for someone that's a scalper unless if it's a breaking news and something that just happened and it affects and it added a lot of volatility into the market. Okay, but sometimes all this loud, having the television on, loud and saying might disrupt you a bit. So try to limit that, or okay, watch the news and then mute it and check your charts and stick on what your charts are telling you. Also, don't waste your time by what others people are saying in the groups and social media, because the only thing that they want to they are aiming is just to mislead you. Why is that? What I mean by that? For example, last week in my live analysis, there was one or two people, I don't remember how many, saying that, oh, short gold, sell gold, sell gold, sell gold. And I was like, why? It was bullish. It was bullish. It had the biggest candle for many, many months now. They were doing that obviously because they were themselves short, so they wanted to affect the opinion of others and to make them enter short positions in order to eventually, because they thought that they could turn the trend. Okay, so be careful when you're trying to listen others. It's better not to. It's better to emphasize on what you understand and what you see, and try to develop yourself and make yourself better trader. Don't blindly listen to what others are saying. It's good to hear opinions, but not to leave yourself manipulated by others. Also, okay, trading from mobile while in a cafe or on the move, especially on the move. If we're on the move and we're trying to like very, very rashly open a position without calm down a bit, check exactly what's going on, and then open a position, it might impact your performance. So if you are on the move or you are in an event, and make sure that you won't affect your decision. You will do a wise, careful move. So you need a clear mind without no alcohol, obviously. High external stress or illness impact our decision making and observation abilities. And this is for everything in life, guys. I know that it might sound minors, but it's true. Okay. Most traders don't bother coming to webinars to learn. That's true. I have seen that for 6 years now. We may have thousands of clients, but only 1%, not even the 1% of them joins webinars. It's okay if you don't want to join our webinars, fair enough. You might don't like the way we're presenting, you might disagree with us, that's fair enough, but make sure that you are studying. If not with us, if not through our webinars, you're educating yourself, reading articles, watching, I don't know, watching educational videos, reading. There are many books for trading out there. Try to keep yourself not up to date. I mean, it's trading. It's a constant learning. The more you learn, the better you become. Don't ask someone in Facebook whether you will sell or buy. Even if you ask me, I will not tell you, simply because I don't know what position, what size of position you want to enter, what time frame you want to enter, how long, I don't know, how much you want to benefit. And no. For me, something might be long or short because I'm watching the long-term trend, because I'm watching the daily trend. Someone else might considers, I don't know, entering in 1 minute chart. So they're not related. This is unlikely to, if you have this kind of mentality and attitude, it's unlikely to succeed. You need to understand what is important and apply this knowledge in practice. So after everything that we have discussed today, the next thing to do is practice. Demo account, practice until you feel ready to enter live. Until you feel that, okay, I'm ready, I can do it, I have stick to a plan that looks to work for me. I know what's my biggest weaknesses, I won't know what's my biggest strengths. I have trust on myself, I'm confident enough, so I will try slowly with risking just $50, $10, $100. I will start slowly because I've done a lot of practice and I feel ready. So practicing is the second essential thing. High frequency fallacy. Okay. Scalping is easy as I am quite quickly in and out of the market. Wrong. Big mistake. It's quite the opposite. Scalping is a highly engaging and demanding way of engaging with the markets. The number of false signals is greater than information flow and can be much more demanding to handle due to the speed of its emergency. So there is no reason the higher number of trades alone will lead to higher profits. Okay? Overtrading. Oh, I love action. I trade 150 trades per day. Again, wrong. You will get what you really want if you love trading, if you do it like calm. Some trades per day, not too much. Don't turn yourself and say that, oh, I'm losing, I will open more and more in order to flip the losses that I have. No, that's over trading, and over trading creates unnecessary costs. Over trading happens when people are in a fear that they have, because they have losing trades and they might have a big trading fees, high spread, etc. Sometimes they say, oh God, no, I'm gonna open more position in order to cover these losses. No, it's better to close your positions if you are in loss or something. Close it for the day and come the next day with a clear head. More time spent in trading means less time and energy available for other productive things such as trade and market analysis. Over-trading scalpers lose the focus, lack of energy, ability to concentrate. So that's why I'm saying it's better to stop, close your position, and come the next day with a clear head and start again. Okay. Stick, by the way, just to emphasize that over here, stick to 5 to 10 trades a day, the maximum. Okay? Okay, before adopting a forex scalping strategy, it's important to understand currency liquidity and volatility and the pros and cons of this trading style. So you need to start from the basics. What is spread? What is margin? What is liquidity? What is volatility? How I can have the spread on my side? How can I what's the volatility dynamics, how it could affect my trading? So when scalping, always go to the lower spread pairs. Okay, exactly because scalping is a high trade volume. You know, we open several positions in a minute chart, in seconds, in 5 minute charts. It's better to go in a lower spread pairs because low pip margin strategy, where spread can hit your long-term dollar returns. Sorry, sorry, I confused you. So, oh yes, as I was saying, when scalping, always go to the lower spread pairs because scalping is a high trade volume and low pip margin strategy, where spread can hit your long-term dollar returns when compared to low volume, high margin trading. Remember, spread is a double sword. It can hurt as well. Our aim is, if you are scalpers, it's to keep it low. That's why I choose pairs with low spread if you are a scalper. Also, high liquid pairs such as euro dollar, pound yen. Okay, euro dollar is the most famous, the most highly liquid pair ever. Cable, dollar yen, euro pound. These are very highly liquid pairs. Highly liquid pairs tend to follow the laws of ranging and trending. Markets better than other assets that they are not so liquid. They have low liquidity. Okay. So that's why the majors is a good start for scalping. What else? What else? Also, volatility. So you need to pick the most suitable currency pair, as we said. Try to consider low spread currency pairs, high liquid currency pairs, and remember how volatility could affect your trades. Volatility allows traders to profit from rising and falling market prices, right? But it's important to have a risk management strategy in order to minimize losses, especially if you have to do with leverage products. So scalping is most successful when markets are volatile. So if you are following a scalping strategy, the best time to open a position is during the sessions open and close. That's why I said to you before that it's good to do your homework 1 hour before the market open, because the sessions open is a quite volatile session, so it's good for scalping strategies. Like I showed you before gold and how big the opening candle was for the European Open. So yeah. No attention to details. So I'm just trading and then check the results at the end of the day. So it's good at the end of the day to do a bit of a review. what you did correct, what you did wrong, how your profit or your account is developing, what actions you have done and how they impacted your trading account, your risk and reward ratio, like a review, in order to improve if you did something wrong the next day, not to repeat it. So remember, we said that risk management also involves having a precise number of trades per day, not exceeding, not opening more, not over trading. Have a precise risk and reward ratio, have a precise allowed daily loss and a precise daily profit. And if you reach that profit or if you reach that loss, stop for the day and come the next day with a clear head, okay? Because there is no reason to overdoing it. There is no reason for over trading in order to get a higher profits, because at the end you're likely to end up with high losses. Don't, other than over trading, which is too many trades per day, you need to not to reach risk too much per trade. You need to have a limitation also on how much money you are risking per trade and per day. You need to say, okay, per trade, I don't want to risk more than 1% of my balance. And per day, I don't want to risk more than $100 of my balance. So you need to set limitations in advance and to stick to them. This should be part of your trading plan. This will save you from huge mistakes that could be made by greediness or fear. Because an example, if someone lost 50% of his account, the recovery is very, very difficult. The returns needed to recover to zero level are very high. Why should I worry about the daily charts? I'm a scalper. No, you should worry, because if you start with the daily chart just to spot any significant support and resistance level, so we're starting from the daily, identify the higher time frame support and resistance levels, they go down to 4 hour, find the one support and one resistance level for that level, go to 1 hour chart, find the immediate support and resistance level for the 1 hour chart, move lower and lower, because markets tends to go always near its major daily support or resistance level. A lower time frame downtrend is likely to fail if market is near major daily support. You need to understand that. Small time frames that keep on constantly selling short against major supports are fighting against the probability. So keep yourself at the same side as the trend. So the same applies to those that always buy at major resistance level. Okay. What else? So after the webinar, if you have the time, please check our webinar for on how to create your own trading journal, your own trading plan. Write down your routine. You wake up at 8, at 8:30 you are on your PC, checking the charts, how much you have to invest, how much you are willing to risk in every trade, every day, how much you're willing to risk overall every day, how much you are willing to risk overall every week, What's your ambition? How much you want to gain every day? How much you want to gain every week? What's your risk and reward ratio? How many trades you want to open every day? Which time frame? Obviously, your technical setup, and stick to a particular one. So read all this down. You ask me, Emmanuel, what's the best leverage to use for a $50 account? Sorry. Okay, that should be around 1 to 100. Okay, if we are referring to equities. If you're referring to Forex, it would be a cent account, and we have a cent account. Okay, so yeah, a cent account is appropriate because it has micro lots. Let me just check a bit because you mentioned $50 only. Yeah, that should be low. So 1 to 50 leverage, 1 to 30, somewhere there with $50 account. Okay. Yeah, guys, if you have any further questions, stick it in the box because we're nearly at the end of our webinar. Okay. So these are the pros and cons of scalping. Pros, obviously, is the fact that you can magnify gains with leverage. But cons is that you can magnify losses with leverage as well. That's why you need to set some limitation for yourself, as we already covered. You can open and close position quickly, but make sure that you are not over trading, because over trading or opening one big position just to cover any small losses, the only thing that you will manage to do is wipe out your small wins and end up with a very large loss. Yes, Emmanuel, is 1 to 50, 1 to 30, and possibly a cent account that contains micro lots. Okay. You can trade using scalp. You can apply scalping anywhere. Okay, it is ideal for Forex pairs, but it could be easily applied in commodities as well. But you need to make sure that it's a high liquid asset and preferably with low spread as well. Risk your money on a highly volatile market. That's the con of scalping. So make sure that you are aware of any important events coming out, and they could add a significant volatility on the asset and big spikes or big drifts. One of the big advantages is that you can reduce losses by holding position for a very short time. But you can gain profit slowly due to the small incremental wins. But for me, that's a plus, not a minus, because slowly is better than losing everything in a single day and blowing out our account. Okay. Sharif, if you are a scalper, you don't need to apply your scalping setup on a daily 4-hour and 1-hour chart. No, scalping setup is for 1-minute chart, 5-minute chart, okay, 15-minute chart the maximum. But what you can do in the daily, hourly, and 1-hour trade is just to spot some important support and resistance levels that they might help you in your 5 minutes setup and etc. Okay. On the euro dollar, I see head and shoulder. The support is at 103.87. Okay, let's check. Let's set euro dollar 30 minutes chart. Okay, let me clear a bit this mess. Sorry. In the 30 minutes chart, you're, I guess you're referring to this, and this, okay. And the neckline was here, it was supposed to be here, but just for, let's stick it here. No, neckline was definitely here. Okay, what you're saying, I had a shorter, the support is at 103.87, 87, why 87? Oh, the immediate support. So this double bottom over here, prayer. Yes, okay. I'm gonna out a bit. Head and shoulders, indeed an inverse head and shoulder, broken, extended to 104.37. Indeed, the immediate support. We have a big pullback over here. That looks an evening start. So the next support is indeed 103.87. Yeah. Yeah, that's a pullback. Bullish doji and a strong bearish candles limiting and reversing the losses of these two first candles. So this looks like an evening start. Okay, what time session US open and close? So, okay, in server time is at 4:30 Cyprus time. So I don't know where you're placing the word, dear Sharif. You need to check. Okay, so for me it's in 2 hours and 17 minutes. Okay, guys, we're pretty much done. So now it's the time for questions, if there are any more questions. As I said, go to the past webinars, and actually if you want to see some actual scalping strategies, if you search scalping, you will see some scalping strategies that Stuart presented on the 4th of October. Today, what we have done is highlighting the risks of the risk and the rules that each scalper should have before starting its career as a scalper. Okay. But if you want to see an actual scalping strategies in order to gain some understanding, or you might want to check them, practice them, test them, etc., go to the past webinar page that I have posted earlier, search scalping, and you will see several webinars. The very last one was on the 4th of October by Stuart, who presented several scalping strategies at once. Yeah. First of all, you need to check your calendar, dear Sharif. If you see red bar in the calendar, this means that these events tend to be very, very volatile. Okay? When you can you, Emmanuel, you're asking when is your Lagos training seminar coming up, and also weekend classes? Okay, I don't know if I think the team there keeps doing some training seminars in a weekly basis. They haven't stopped in Lagos. So can you contact? Actually, I need to. Actually, you know what? I'm gonna send your message to the team there, so they will contact you and help you to arrange a meeting if you're available to go in our offices there and having a session, or they will let you know about the calendar amount, when they're gonna, how often they have training seminars, how often they have classes, and etc. So team there is a big team, and Heritage, the market analyst there, is brilliant. So I'm gonna bring you in contact with them. Okay, I'm gonna send it a message to him right now. Right now, I've already texted him. How can we get our certificates? Christine, can you send me an email at webinars@hfm.com, please? And I will send you, if you want a certificate for attending the webinar, I'm going to send it to you, okay? Thank you very much. So guys, if there are no further questions, I'm going to call it a date. Thank you very much for attending. Take care, because we have still another busy week. So Sharif, it's not what time HFM opens and closes. It's not our company that opens and closes the markets. It's the exchange, it's the market exchange. London open, Frankfurt open, Paris open, New York market open. It's the actual exchanges, market exchanges. So okay, I can tell you in Cyprus time. So European open opens at 9:30 every morning from Monday to Friday, and US market open starts at 4:30 every day, Monday to Friday, and Asia opens. Let me just, I have it on my phone. Shall I have it? Where's my? Okay, I need to download again. And Asia opens on Friday, on Sunday, sorry, 2 o'clock TCE, which that means, let me just convert it for you. That should be +3 hours, so 5 o'clock in the morning for Cyprus. But you need to check on your, where are you placed? Where are you? Where are you from, Sharif? Nigeria. So Nigeria and ours, and me here in Cyprus, do we have the same time? We have the same time. Let me check how much difference we have. So for me, okay, we have 1 hour difference. So for you, it's 20 past 1 right now, and for me, it's 2 past 1. So it's 10 past 2. So we have an hour difference there, Sharif. So that means for you, US market opens at 3:30 in the afternoon. European market opens at 8:30, and Asia market opens at Sunday 11 in the midnight. Yes, if I'm not mistaken. Please cross check, okay? I'm a bit confused with your time frame and my time frame. Okay, guys, I'm gonna call it a day. Thank you very much. Okay, I have some questions to ask. Can I send you an email? Of course you can. So my email address is, let me bring back the first slide. Guys, our email address actually is this one. Oh, come on. This one, webinars@hfm.com. So feel free to contact us, okay, and ask anything you want. Webinars@hfm.com. Thank you very much. I'm gonna call it a day. Have a great day ahead. Take care, because it's another busy week. So check your calendar, because the statement from UK, the inflation from UK, the G20 meetings, the crypto crisis are things that add volatility to this week's calendar. Thank you very much, and see you again tomorrow. Bye-bye.